$36,000. That's how much money I've lost so far in the stock market. And this video, I gotta get it out super fast. Forget about the thumbnail, forget about everything, because right now we're having the biggest wealth transfer ever. And this is the type of stuff you read about in the history books from 1929, from the year 2000, 2008. We're living that right now in our era. So taking advantage of this right now is super important, because you're gonna see a lot of new millionaires and a lot of old millionaires. They're gonna go broke. It's gonna be very, very ugly on the streets, but it's also going to be amazing for the people that know exactly what to do. And although I'm losing a ton of money, it is a great opportunity right now to make a lot of money. So in this video right now, I'm going to tell you exactly what's going on, what to invest into, what not to invest into, and most importantly, how much money to actually invest, and what I'm currently doing right now with my current investments. Okay, so I'm going to break everything down. As always, smash the like button. On top of that, also subscribe to the channel and hit the bell to get notified. And without wasting any more time, the first warning I gotta give you guys is this. Not every down market is going to be a wealth transfer opportunity. Now, right now, if you use common sense and you do a little research, it comes to look like this, okay? Right now, the stock market is down for obvious reasons. The entire Fed is going to hike up the rates. So because of that, and we know the economy is going to slow down, and they're doing that in order to basically halt inflation, the stock market, people are selling off to make a quick profit. But then at the same time, because it's going further down, other people at the bottom, which are very impatient, are also beginning to sell like crazy. And this is causing a massive sell-off. But overall, it's for a good reason, right? Because obviously we need to slow down the economy to halt inflation, because that's not a good thing anyways. But right now, currently, we might see some issues at the meantime. And by the way, I don't think this is going to go beyond 12 months to 18 months. That's just a standard prediction. Don't quote me on that, because I don't make short-term predictions at all. But I'm just saying, it's just a small detail right now that's causing all of these issues. But it's not like, oh my gosh, the economy is sinking, things are going bad, terrible, terrible, warning, warning. It's not that. It's just people are panicking over something that's that simple. We're trying to slow down the economy to halt inflation, to help the economy overall over the long run. And that's causing a massive sell-off, because people think, hey, if the economy slows down, so do earnings, so does hiring, so does sales. Stock prices are going to go down a little bit more, so they want to cash out now. But the other people at the bottom, they're starting to sell like crazy, because they're predicting, hey, oh my gosh, the whole world is over. So what happens here is very simple, and what's happening is what you're seeing right now. The stock market is going bonkers. And by the way, for example, my investments, I'm known on YouTube as the most famous long-term boring investor there is on this platform. And my investments are like a rock. In order to move it, something massive has to happen. It's like a massive boulder.
It's not just a boulder, it's a rock. A rock.
Keeps going along. It's gonna go along, okay? Like in one of those movies, it's gonna go along, but to knock it off, it takes something massive. And right now, some parts of my investments are down 26%. Overall, I'm down nearly, again, 15%. And by the way, this portfolio goes up by around 11% a year on average. So for me to be down this much, it's a crazy scenario, because it means if I put money in my portfolio right now and 12 months from now, we kind of average things out and go back to normal, I can easily make like 33% on my money. And that is basically 3 times more than I would basically make on average. That is a massive opportunity. What would take me 3 years to make, I can make basically in 1 year. And that's just me, the boring investor guy. Imagine other people here on the platform that can basically pick stocks or whatever, and they can make double, triple on multiple stocks and so on. However, though, this is obvious. This is common sense. Fed rate hikes, people are predicting stuff. But I want you guys to remember, not every down market is a wealth transfer. A wealth transfer is basically the impatient are selling and the patient are buying because they understand what's going on. However, though, we are in a very interesting situation. We have a whole war going on, right? We have the whole Russia, Ukraine stuff. That stuff is very spicy over there. Now imagine that causes an issue with us too, and then the whole thing goes Kind of crazy, right? Now, if that were to happen, and by the way, God protect us all. Like, that's terrible, horrific. I don't want any part of it. Like, honestly, like, it's crazy stuff, right? I haven't seen a war in my lifetime, or, like a crazy, crazy war, and I don't want to see one yet at all, or ever, okay? But the whole point is, if something like that actually does happen, you might see the market go down, not just by 20% or 30%, maybe 40, 50, or 80%. That might happen. And when you see that happening, you might say, well, Tommy, that is even a greater opportunity. But in reality, you have to be very careful here. Because right now what's happening is hike up, help the economy. But if that were to happen, if prices go down that low, 50, 80%, and then let's say, for example, that happens and it doesn't go our way, those may become the new prices, or it might just go to zero and you might just lose everything. So my point is this: whenever you're investing, don't just close your eyes and say, well, market is down, I'm going to put some money in, everything's fine. No, use common sense and look at exactly what is causing everything that's going on right now. And understand here, okay, Fed rate hikes, predictions, normal, help the economy. This makes sense to invest into. But when you have problems, don't know what's gonna happen, nuclear stuff, maybe hold up here for a second. I don't want to go all in, okay? That's my point. Use common sense and notice exactly what's going on here. Now, here's a second thing I want to point out here, okay? My second warning here, before I tell you exactly how much to invest and what to invest your money into. Whenever you have a down market overall, you ever heard the quote that, a rising ship, what was it? A rising tide brings all the ships up or whatever. Well, so does a low tide. It brings everyone down. And you might have a great ship, for example, and it's an amazing ship, but it's still going to go down even though it doesn't deserve to go down. So what I mean is this, without the sailor talk, okay? There are a lot of well-known, great companies with solid financials. And what I mean is basically good management, a lot of cash, barely any debt, selling for a very good price, a thriving business. And these stocks might be going down right now. You have companies, for example, I have a list here. You have, for example, companies like Target, Exxon, and you also have Shell, like the whole fuel company. These companies are down right now. Now, do they actually deserve to be down? Well, I don't really know. I'm not going to tell you that. Okay, that's for your investigation. I don't want to be responsible for that. Okay, if I ever have a stock pick, I'll tell you guys, but I want to hold off on that just yet. Okay, but these are very well-known companies. Everyone knows Exxon, everyone knows Target, and on top of that, everyone knows Shell. They're everywhere in America. But the point is, these companies are also down 5, 10%, and so on. Now, that means, for example, are these now great investments? They might well be. However, there are also a lot of other companies out there that are just as well known, but they might also have terrible financials. They might have very little cash to survive a depression or a recession, for example, or just, for example, a down market. They can't survive it. They have a lot of debt. They don't know what to do. Bad management. The industry is going down. But just because they're well known, my point is that it doesn't mean that now this company is well known. It used to be X price. Now it's X price -1. So it means I got to invest because I got to take advantage. The answer is no. Again, you have to use common sense. Because if you remember Sears, remember Radio Shack, remember, what is that called? IBM. Remember that those, IBM is still around or whatever. But all of those super, 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 super well-known companies, a lot of those companies Blockbuster, did not make it, did not survive. Because just being well-known doesn't mean you can't be broke. The local crazy guy is very well known, doesn't mean he's saying, well, you want to hang out with him, if you know what I mean, right? Just being well known is not enough. You got to know exactly what goes into this company. So my point overall is, if you're going to be looking at all of the losers right now, if you're a stock picker, you look over them, you check them out, right? But then you also have to study their financials. Don't just invest blindly based on, hey, this company was X and now it's not, and now I'm going to invest more money. And by the way, you see this a lot also with other investments. For example, like Bitcoin. To me, Bitcoin and cryptocurrency is not an investment because you can't invest into it on an investment basis as far as like actually knowing what you're actually doing and calculating it. It's just more like speculation and valuing it something in the future potentially. But those things are also super, super down now. So are those investments or are they not investment? Are those opportunities or are they not opportunities? You see what I'm saying here? So you have to understand exactly how to value these things before you go ahead and you put your money into it. Now, the last part here of this video, and this is my final warning. How much money should you be investing right now? And on top of that, what should you be investing your money into? Okay? Now, the first part is this. How much to invest? You can invest the money, or I would invest the money that I have available to invest that I will not miss for a long time. And what I mean is this: you see this opportunity right now where the market is down, depressed, things are not that great right now, and you want to invest all of your money, all of your savings. You grab, hey, I have $10,000, I'm going to put all the money in, and that's all you have. You're at zero now. Now, if anything were to happen to you, you have an emergency, you need some cash, you have to pay your bills or whatever, and you need to take that money out of the market. If the market goes further down, because we don't know how low it can go, okay? You just don't know how low it can go. And you don't know how low it's going to stay down for, or how long I should say. The answer is you don't want to put yourself in that position. But if you have, for example, $20,000, you want to invest $10,000, you want to stick with your emergency fund and some extra money just in case, the answer is that's fine. Because if something were to happen, you have extra cash to kind of fulfill your needs and not have to worry about it. My point is, don't put all your eggs in your basket if you're going to need to basically eat breakfast the next day and you don't want to starve. That's the whole idea. Now, what to put your money into? Now, if you are a part of the long-term team, the boring squad, the people that invest money for the long run, and you're making like 11% a year, right now it's a great opportunity because right now we're losing so much money and that's very rare. Again, it takes an earthquake to move this type of boulder that we're building. If you have a diversified portfolio where you're basically investing in the entire market overall, well, I should put it like this so you can actually see it, right? That's my portfolio right there. Those are all my investments. Like, for me to lose my money, the US has to go down, international market has to go down, real estate market has to go down, rising market has to go down, emerging market has to go down. Everything in this world has to basically go down. It takes a massive event for me to lose this much money. So it obviously becomes a massive opportunity for people that are investing like this for the long run. So if you have extra cash to go ahead and invest and capitalize on this, I would basically do it. It's a great opportunity. Now, I did this in 2020 when the market was down a lot because of the pandemic. I made a lot of money, not just in this board investments, but also in a stock. I put some money into Delta and I made around $28,000, which was like 128%. It was a solid investment, good investment. And I also made a lot of money in my boring stuff with my ETF portfolio. And by the way, just for context here, although my portfolio is down, overall, I'm still up around like 4% because I bought in at 224. I'm still worth like 229. And some parts of my portfolio are still up like 32%. It's just the other parts. The US market part, I'm still up like 32% because when I was down last time, I bought in a lot because it was a great opportunity and I bought in a lot. And right now it's down again and you can buy in a lot also and capitalize over the long term. But I'm not missing this money at all and I don't need this money right now because I knew the money I was going to invest, I was going to have it in there, not for a few months, but a few years. That's the way you got to think when you're doing long investments. Now, for the people that are out there and you're wanting to pick investments, whether it's cryptocurrency, whether it's individual stocks, or whatever you actually want to invest into, including even bonds or whatever. Now, the idea is very simple. Where you go to fish is where the fish are. Now, all the fish are going to be most likely in the pond of the big losses. So wherever brokers you're basically using, I like Yahoo Finance, I like Morningstar. These brokerages and these websites, you kind of go into them and you see exactly what are the latest stocks that are basically losing the most money. And you go over them, you check their financial statements, you have the income statement, the balance sheet, the cash flow statements, and you study them and you find out, is this a great company? What is the real value? Calculate intrinsic value. And based on that, you decide, is it selling for a discount or is it not selling for a discount? Now, obviously, you need to have the skills. So this right here is a great book to figure those things out. Now, will you learn stock investing before this is over? I doubt it, I'm being honest. But it's a good thing to learn if you do want to become a stock picker. But if you don't and you want to be a boring investor like I am, the answer is going to be you invest in your portfolio over the long run and you capitalize right now because these opportunities are very rare. However, though, for my speculators and also my gamblers, my rule is always when you want to take a guess on something, do the 90-10 rule. 90% of your money, things you understand that are boring, 10% into things that are very risky and you don't know what's going to happen, but if you make money, you make it big. That's great stuff, right? So if you see that Bitcoin is down right now and you want to put some money into it, just put 10% of your money into it. If it works out, it works out. If it doesn't work out, it doesn't work out. But at least you're not down all of your money. So speculating, I wouldn't do it. I don't do it. But if you want to do it this way, it's a way where you're still putting money into things that make sense, but you're still scratching that itch by putting 10% in there. And if you hit, you hit, and you make a lot of money, and that is great. But my point is, okay, overall, use common sense when it comes to looking at a depressed market. Because depending on the situation, it might be a way longer ride than you thought it actually was. And just don't invest blindly just because, hey, the company is well known. One big company that is super down right now is Netflix. But is that because of this? Or is it because of something else? Is the company overall still selling at a discount, or is it still overvalued? You know, you can have a Gucci t-shirt that costs like $1,000. It goes down by 20%. It's still an $800 t-shirt, okay? You know what I'm saying? So it's important that you know how to value these things. And lastly, if you are, for example, going to invest money, you're able to invest without having a headache about it. And if you're a long-term investor, capitalize right now. And by the way, if you made it all the way to this point in the video, comment down below market. That way I know you watched until this point. So comment down below market and also your comment, or just market to help the channel and so on, okay? But overall, one thing I will say is right now, currently, I'm not investing any more money than I would normally. And that's not because it's not a good idea. It's because I'm still working on my house and my remodel. So that takes priority for me right now, because that's right now. And whatever money I put into that boring portfolio, I'm not going to see it for the next 10 years. Okay. So you got to kind of put things into perspective. So I'm still investing my normal 20% of my income. No problem. As you can see right here, right? I invest basically like almost every week or whatever. And you're seeing I still have, for example, like trades that are currently pending right here. You see, I still have trades that are pending. It's just that today, I think the market is off today. So I'm still investing my money regularly, automatically, no problem. Just 20% of what I make on average. So I put that money in there. But once this house is done, if the market is still depressed and I have the extra cash to put in, for example, a lot of money into it, I'll put a lot of money into it, because it's a great opportunity to invest and to transfer some wealth from the hands of the impatient to the hands of the patient. And one thing I am is I'm a man that can watch grass grow and I can watch paint dry. And that's my thing, okay? But on top of that, I'm also, in the next year, I'm going to be picking a lot of stocks, and I'm going to let you guys know about that. So make sure you are subscribed to the channel and hit the bell so you're notified, because I guarantee you're going to make a lot of money by watching this channel. Thanks for watching, guys. And as always, like, subscribe, hit the bell so you're notified. Don't panic. It's a part of the game. It's the game we're playing. And welcome to the long-term team. And here's another video right here on long-term investments. And here's another video right here. Well, my face is here. Click and subscribe. And as always, long-term team officially out.